Welcome back, traders, to Market Analysis 101. This is the weekend special. If you haven't done so, please hit like and hit subscribe. Hope everybody's doing well today, and I hope that you had a good trading week. So I'm going to go ahead and cover the S&P. We're also going to cover gold. We're going to see what gold is telling us about the market. We're going to review what happened on Friday. And finally, we're going to look at what to expect this coming week. Let's jump right into the market and let's look at what happened this week. So if you recall, last Sunday, from what it looks like, we have a sort of move up at the start of the week, and then we're going to start seeing either sideways action or a lower move down towards the end of the week. So just to clarify, guys, I do not have a crystal ball. So as you also might recall, on Thursday, we also talked about getting stuck in this trading range, which is this box right here. And we talked about if we continue to stay in that box, we're going to start creating a narrative that we are creating a bull flag. In other words, once we finish with this trading range, we would continue our merry way up. However, we were being careful to make sure that we got confirmation of one way or the other. In other words, if this was going to continue up or if we were going to continue going down. Now, if you missed that video, don't forget to hit that subscribe so that you can get notifications when we upload a new video to the channel. So last week, we were stuck in this trading range, and it doesn't mean that we couldn't trade it. We just had to be patient to find those entries and also those exit points, which essentially were within that box. What do I mean by that? Let's drill down closer into the 5-minute level so I could explain that further. Again, going off of the Sunday video, we talked about a move up, and we gapped up and then got rejected, and that's where we created our first trend line. Then we dropped down and we bounced right back up. That gave us the opportunity to create the following trend line. Keep it in mind that the market was trying to fill in this gap up on the way down. You might recall me saying that I took a trade in this area, looking to come and test that top of that trading range. Given that we got a little bit of rejection, we found a point where to pull away and take some profit. And throughout the week, we found ourselves within another trading range, which was this area right here. Again, we saw that as low risk, and we jumped in on a short to trade this area down and then trade a little bit of that pivot up. Finally, come Friday, we had another gap up. We took a trade on the night before, which ended up being positive. Now it is important to understand that not every trade is going to be a successful trade. However, what is the focus of these videos? The focus is creating good trading habits. So I want to share why I took that trade the night before. If you recall in previous videos, I've talked about the three-way structure that we call an impulse wave when we are in a bullish trend. However, when we are in a bearish or rather corrective trend, there's a two-wave structure. So on Thursday, at the end of the trading session, I was able to identify that we were coming in here for a two sort of wave structure. We came up and then we came down. Given the fact that we created this support area, I decided to take a trade right out of that support, hold it overnight, and then sell in the early morning. So let me repeat that once more. In most corrective structures, you can identify that you have fulfilled or that you are in a corrective pattern when you see a two-wave structure. However, I like to call it a two-wave structure because you have this wave one, right? It comes back and then you have this other wave come down. So when you identify this pattern and you identify a consolidation point, that is a moment where your risk goes lower and the ability to get the reward back goes higher. And so on Thursday night, after the market closed, in extended hours, I entered a trade on the SPY, which resulted in a move up and took profits in the morning. Now, why did I take profits in the morning? Well, one, I did see the spike, but overnight I kept an eye on the futures. Now, your follow-up question might be, why did I take profit in the morning? What was the indicator that I used to make that decision? Mainly, it was the overnight action that didn't really play out as an impulsive wave. And so that created more risk. And so that elevated the risk for me, causing me to take profits early in the morning. And when I mean early in the morning, the moment the bell rang, that was the moment that I already sold. And what ended up happening? We got a downtrend. So overall, the week was very profitable, mainly by observing personal trading habits. And this is why it's very important to create trading habits so that, again, you're maximizing your profits and minimizing any possible loss. Now, before we go any further with the S&P, I want to draw your attention to gold. And let's look at the impulse structure that we have in front of us. Okay, so I'm going to go back just a little bit. Let's identify any impulsive wave to begin with. So right off the bat, we can see a three-wave structure. So right off the bat, you could identify an impulsive wave here. 1, 2, and then possibly 3. I would actually take a step back and put the 3 right here. Because ultimately what you got down here is a correction. And now it seems like we got another impulsive wave up. Now, mind you that I said it seems like we got an impulsive wave. At the moment, we are creating, you guessed it, a bull flag. It seems like we've been spending some time here consolidating this area for this move up. And on Friday, gold ticked up. It seems like it's trying to make a move to break out. An additional point of reference, you also see sort of this head and shoulders formation happening here. We can't forget that this is the people's safe haven. It might not be your safe haven, but most people who have been trading for a while or that may have a retirement account, usually they run to gold when they see that there's more volatility ticking up in the market. And what do we have? We also have the VIX ticking up higher. So all these indicators help us make a case for whether we are going to have a bull week or a bearish week. So let's turn back to the S&P and now talk about where we're going. So I want us to take a detour to the S&P 500 CFD. So I want to draw your attention to Friday's closing. I'm talking about the extended hours. We ended at 3069.5. Now let's go back to the S&P. And where does that put us on the S&P? 3069 comes close to this area that we talked about on Sunday, the previous weekend. So can we make sense of anything that we have on the chart and make some projections? Yeah, of course we can. So let me remove the trading range. And I want you to, so far what we've done in this correction or consolidation area is come down. We went up. We came down. We've gone up. We went down, almost testing that low area. We went up just a bit and we came down close to that resistance area. So what can we expect for the following week? There's 3 scenarios that we got to look out for this following week. Scenario 1 is that we bounce off of this area and then we go up higher and we break out. Scenario 2 is that we get rejected once more, we come down, and then we bounce out of this area and break out again. Those are the bullish scenarios. Now the bearish scenario is that we break through this support area and then go lower. The question is how low? And the next following resistance area will be in your 3008 area. And you might say, well, that's so special of 3008. Well, let's look back historically. We came up, we came down, we contended with that area, we bounced right off of that area, and that area became a pivot. So we want to keep an eye on that area because that might be the zone that we might pivot up. If we break through that 3000 area, the following support is your 2787 area. That is going to be our following support. Again, that is only if we break through that 3008. Again, that's only if we break through that 3008 area. We will come down and we will start contending with that 2887. And yes, and if I see some strong breakthrough, then I will probably put on my big boy shorts. Look to exit my short position around this area. Again, I would have to look at what's happening at that time and look at what type of confirmation we're getting and what the structure looks like. And once we hit that target, then I will probably consider some calls for the move up. Again, that's the bearish scenario. Scenario one would be that we actually bounce off of this support line. If we don't bounce from that support line, then our next following target will be in the 3,000 area. However, if we don't pivot from that area, then I am going to be looking at the 2887 area to look for an entry there. So that's the market wrap up. If you have any questions or comments, please add them below in the comment area. I would love to hear your thoughts as well. And also don't forget to hit like and subscribe to the channel if you haven't done so yet. All right, guys, stay safe and stay profitable.